So today, traders, we are going to deal with the topic of trading psychology. Why trading psychology is the first thing you should master. And what is this trading psychology? So before we jump into that also, I will read you what I've prepared for you, all the bulletins, the answers, the explanations, and the three mistakes that we are going to deal with. And then after reading them out to you, we practicalize every mistake. I will show you, I will draw out charts and interact with you, ask you how you guys are feeling about a certain movement so that it can become a learning experience, both fruitful for me and you. So without wasting time, let's answer the first question. What is trading psychology? Now, trading psychology is the study and understanding of how your emotions, mindset, behavior affects your decision in the financial markets. Because all of our decisions are affected by the kind of mindset you are in, your behavior, whether you like it or not, your everyday behavior do affect your decisions in the market and your emotions. So this trading psychology topic, it is not about charts or strategies. It is about how you think and feel while trading, and how those thoughts and feelings influence your actions in the markets. Now, with that being said, you have to understand that trading psychology covers things like patience, discipline, emotional control, and confidence. Now, what do I mean by those four pillars of strength in trading psychology? Firstly, we have to talk about discipline. Discipline means sticking to your plan even if you are tempted to break it or to stray from your original plan. That is discipline, right? You do it whether you feel like you don't want to do it, whether even in life, discipline applies like that. You don't feel like working out today, but since you are a disciplined individual, you are still going to go out and work out. That's discipline. Patience. Number two is patience. Waiting for the right setup instead of forcing trades. You can see that you were waiting for a pullback, but you did not get a pullback, for an example. And then you end up saying, the pullback might never come. That means you don't have patience. You don't want to miss a trade, which brings us to what? Fear of missing out. FOMO. That's what they call it. They call it FOMO. Fear of missing out. That simply means that every signal that you see, you want to jump into it and you want to make sure that you profit from it, which is going to deplete your account slowly or harshly. So the third bulletin or the strength pillar of trading psychology is emotional control. Now, emotional control means managing your fear, greed, frustrations so that they don't ruin your trades. Confidence and trusting your analysis without overconfidence. Listen, you ever win the first trade, the second trade, or let's not even talk about winning the first trade and the second trade like we are stock traders. Let's talk about weeks. You ever had a good week and then a second week and then the third week you say, you know what, let me go all in. I'm thinking of the Mercedes-Benz or the Bugatti or whatever it is that you be thinking about. And then overconfidence leads to depletion of your account. So these are the things that you have to put in your mind whilst we are going to jump into this topic. The first thing is, I have traders that are coming in right now. I see them, they are still coming in. People are late to this live teaching lesson. People are late. I see David Day saying hi. welcome. Yes, everybody else, welcome. It's a fantastic day for us. We are now teaching And I know most of you are surprised, you don't see the charts today. You were expecting to see signals, but we are already done. Everything else is done. So we are teaching today. It is Trading Psychology Day. So without wasting time, mistake number one. Let's dive into mistake number one. Holding on to losing trades. Have you ever held on to a losing trade, hoping that it will come back, and then it does not come back? Let's make an example. Before we make an example, I know everybody else in here is familiar with the movie The Matrix, right? If you are familiar with the movie The Matrix, please click yes. Or rather type yes. Yeah, The Matrix Resurrection 4. There is a scene where the architect says to Neo, he says, did you know that hope and despair are nearly identical in code? And that was funny to me because I'm a trader, because I see this every day. If you have hope that it might go out, it means you are already in despair. I don't know if that makes sense. So let's put it into the market. First of all, can everybody see the circle that I've drawn here? Oh, that's fantastic. Thank you. Yes. I know it's bad. You're going to see a lot of bad handwriting and bad drawings, but it's okay. So, yes. Yes, Jonathan. Yes, this video will be uploaded on YouTube for the public. Everybody else can watch it even if they are not members. Yes. Okay. So, this right here is the only lesson you will do for trading psychology. Firstly, let's pretend that the market is in an uptrend. Right? Everybody can agree that this is an uptrend, this is a bullish sentiment. From what you all know, this is a bullish sentiment. Right? We are still bullish, right? If you disagree, please say I disagree. Okay, everybody's agreeing. That's fantastic. And then, let's say from here, the market decides to, are we in a bearish sentiment now, or are we still bullish? Do you see what I was talking about? Yes. So I see most of you are saying this is a sell now because of the break of structure. Maybe you guys are talking about this. Maybe you guys are talking about this. I'm not sure what you guys are seeing, but the overall sentiment is still bullish. So yes, we are still in a bullish uptrend. Yes. So if the market comes and then comes to this, are we still bearish or bullish? Yeah, I see Mikey saying, I told you it's bearish. It is not. But let me show you. Right? But then, boom, 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 boom. Now, this is what has unfolded. Now, let's jump into holding on losing trades. Now, the first group, I don't mean to disrespect you guys or to say that you guys don't know trading, but I want you to realize the mistake that you would have done jumping into the market without proper understanding. So for those of you who said this was a sell or a bearish sentiment, this would be you would have sold here, and then after selling here, your first target would be here to break out the structure. And then I know guys, I know you will say that this will not be your target, but for educational purposes, let me just show you what I'm talking about so that you can understand. Yes. Yes. So I'm reading your comments, plus I am also teaching, so it becomes a bit hard when I see comments pop up real fast. So this would be your bearish sell. Okay, it's fine. Even if you took profit somewhere here, this would have been your second sell, because now you have not seen the entire part to this levels, to this time. Let's say it is 10. I told you you're going to see horrible handwriting, so it's 10 a.m. It is 10 a.m. Excuse me. Yes, I know. I write like a grade 1-year-old. It's fine, but let's just you know what? I don't want you guys to start laughing at my handwriting. Let me write 10 a.m. here. Let's just say it's 10 a.m. Right? It is 10 a.m. and it's time for, right now it's 10 a.m. and you just entered. You still haven't seen this day, the rest of the day, and you've entered and the market goes into your direction. You make a new low, expecting to make a bit, because this one you have made a new low and then you held a little bit, you made a new low, you expect it to see, and then the market, boom. Holding on to losing trade comes in as an experience. Pay close attention right now. If you are holding on to losing trade, you've entered here, put your stop loss here. You see one thing, this move right here is sharp. It's very sharp. It's like this. This move from down here up to up there, it's very sharp. You see this coming. You see this coming to this level. Now you're on the negative side, but you're still holding on to this trade, right? And then after jumping up, you lose. And then number one, because you wanted to be right, you jump in again, you sell from these levels, expecting to see this, but the market comes over here. Right here, you call it liquidity sweep. This will be your liquidity sweep. This is where everybody else will be like, nah, this is a trap for the buyers. Now we are structured to the downside. We probably are in an A, B, C. You will call it an A here. This will be your A. This will be your A. Where's my caps lock? Yes. This will be your A. This will be your B. Wrong analysis only, guys. Yes, I know. Wrong analysis only. This will be your C. Now, this is where the trap comes in. All this has just happened and you're still looking for bearish setups. This, you are hoping, as soon as this happened and you wanted to see selling, you were hoping that the market has truly or has reversed. As soon as you saw this lower high here, it was deep, but it didn't matter to you. You were still hoping that it might continue down, come back, hoping to make it again down, and then it comes back to this level. Do you see what mistakes people do? Let's make another mistake. This one, let's make another example. This one will make sure that everybody can see what I'm trying to teach here all the time. Okay. This is mistake number one. Remember, is holding on to losing trades. right? So the moment you try to hold on to losing trades, it's the moment you're already lost. Hope and despair are nearly identical in code. So don't forget that code. If you've never watched the movie, go and watch the movie. There's a lot of good information for you guys. But this is not about the movie. This is about your learning experience. Let's say we are in a bullish market, and then boom, this happens. Now, the first thing that comes to your mind is what? Buying. Forgetting anything about the level of strength that the sellers came in, despite the level of strength that the buyers came in. The buyers, they came in hard, took a deep rest. They came in hard again, took a deep rest. They came in hard, took a rest. They came in hard, took a deeper rest than they initially started with. They came in harder, but as soon as the sellers came in, they took control with just one wave. So again, another thing, there's a difference between how waves are formed. If a wave is like this is a wave that goes like this. Let me ask you guys. This is wave 1. This is wave 2. Out of both these waves, out of wave 1 and wave 2, which one is strongest and which one is more reliable? Yes, I can say everybody's saying wave 1 is more stronger, which is true. Now, here, now you see, after wave 1, after the strong wave, we've been having this weaker wave, and it lasts longer than it was, because in someone's mind, this can easily be, this should easily be like this. In someone's mind, this should easily be like this, to prove that this wave was a good sell setup. But instead of that, the market holds and traps those who lacks patience, and then boom. Now, for those of you who thought that this was a sell, if you guys don't have that emotional control to balance yourself and say, you know what, I will try to sell at the liquidity sweep, maybe sell here, sell here, sell here. After maybe you might have gotten in here, and then you lost the second. This is your first wave. This is your first loss. I want to outline your losses so that everybody can see your kind of losses, huh? This can happen. I'm doing this because it is the most realistic thing that can happen in the market, right? After losing 3 times, you are emotionally exhausted. You are starting to find reasons why this is no longer a sell. You want a buy, and as soon as you see these 2 waves up, this one, 2, 3 waves, this 1, 2, 3 waves, you say, you know what, this is a buy setup. You start buying here. You lose again, you start buying here, and then this guy comes in. He might even wipe your account if you do not have proper risk management. Is this clear to people? You lost 3 times on the right sentiment or on the right setup, but you could not. You started to have fear. You started fearing. Yes, I know. Thank you. Thank you for confirming that this has happened to you. Yeah, and sometimes you might think that the market is against you, but it is not. I promise you it is not. It is simply what the market does. It needs you to have that. So imagine if you had all these 5, you took 5 trades and you've gotten nowhere else. You're even maybe 30% down, or even 40%, or some of you even go 0. Does this make sense? But if you would have written down, made a clear plan, say maybe I will trade 5 times for every signal that I have. This would be your 4th signal right here. And then after the 4th signal, you get how great you would have done. Maybe even made 1:8 from this to this. Does that make sense to anybody else? Does this make sense to everybody else? This is trading psychology. Okay? Now, without realizing, I've already made changing your mind too quickly the second mistake. This is your second mistake. You've changed your mind too quickly right here. Yeah, if you realize that, it is good, sir. It is also good. You have changed your mind too quickly. And then there goes the market traps. I love this. The market traps. I don't know. I have many examples that I can create for you guys about these market traps that usually happen when where traders are so sure that this is a buy or this is a sell, and then all of a sudden, right back in your face, it's the opposite, or nothing happens. We have yes, I will remove them too. Imagine yourself in a situation in the first Friday of the month and it's NFP. You've worked so hard from last month, you had just gotten paid, and you realize it's NFP week. The first mistake that you're going to do after realizing that this is the NFP week is jumping in without understanding what the fundamentals say. So, let me just do this for you. We are analyzing, we are doing the last mistake right here. I hope everybody is catching up with me. Falling for market traps. You did the holding on to losing trade, you did changing your mind too quickly, and now we are doing the last mistake that we would like to highlight, which is falling for market traps. Now, falling for market traps is something you don't want to do on the side of. So, before I do everything else, let's do, I was trying to give you the NFT. This is NFT, non-farm payrolls, and it comes out on Friday. So, previously, let's say previously it was 2.5%. 2.5%. This was its previous stats, and then now actual will be 2.5% also. 2.5%. And now the forecast comes out. It says 2.5. This is the best example that the forecast comes out and it says 2.5 also. Now, this is previously it was 2.5. Actually, it's not yet been printed out, and then the forecast is 2.5. And what do we have in non-farm payroll? This is let's do this. This is a euro dollar pair. This is a euro and the dollar pair. The EUR. Right? What this means is that this is in a yearish and then NFP comes in. This right here, or rather this right here is your support. This right here is your support, and 5 minutes from now on, NFP is coming out. So we all know that if the actual says, the printout that comes out says it is 2.4, what are we going to see? We are going to see the dollar weakening, meaning we are going to see strength in the dollar, weakness, strength in this currency pair, which is the euro and the dollar. It will go up. But if we see the actuals going anything above 2.5, 2.6, 2.7, we might continue down. Right? Now, ever since on Wednesday, the market has been on our support level. So with our support level, this is the case. The market comes out, and then the printing goes out to be 2.5. It was keyed in a week before that it was 2.5. So how would the market react? You just got paid plus, guess what? This is the market trap. This means to us traders, it means we will not be interested in jumping in this market and trading this market. No. If the actual says 2.5, you stay out. You don't care about this. So you jump in because you know, plus you can buy that Lamborghini real fast and quit your job. That's what you're thinking, right? So let's see. If this truly happened, you will see that sometimes this scenario will happen, and you will remember this video effect that he said this could happen and it's gonna happen like that. This is what the market will do. It will do, the market will do a very sharp spike and then come back up. Do a very sharp spike and then come back up, come back down. Stay for the entire Friday playing. This is a trap. You did not see that. The market did not move, and it's NFP, and it must have moved, and this is what happened. With this printing, it can happen, especially around key support areas. This is bound to happen. Does that make sense? Let me make the last example of key market traps that you should be aware of. The same pair, euro and the dollar. I know it has happened. Yes, I know it has happened to many of you. But at least now you are awakening to something fantastic. So, another thing that we are having today is this is a bullish market. And this was our resistance. This resistance, this was on Friday. This was on Friday. So on Monday, as soon as the market opened, it just jumped up. And guess what you did? Since you saw this, you said, this is a break of structure, so I'm gonna jump in here. And then you get stopped out by a spike, you get jumped in here, you go in all out with all your money, hoping for better days to come. And then guess what? The market just comes out, boom. The market has trapped you. Neither on Friday nor on Thursday did the market retest the demand zone or our support zone. But you didn't care about that because you did not pay close attention to your levels. Instead, what you did was fear of missing out. You decided fear of missing out or greed. You decided that I'm not gonna wait. This keeps on going up, so I must be part of this momentum that is going up. It can change my life with half your salary. So now you only have transport money to go back and work. I'm sorry. I know, it's not a joke. Okay, it's fine. I see you. I see you. Jonathan, please stop it. Stop it. Okay. Do you see what happens? Fear of missing out. You just took out everything that you had. Do you see what this is about? Do you see what causes this thing? Yes. So, now Smith, listen. I know these rules are too confusing because you can never be, it's like life, balance and discipline. Too much of something makes you sick. Too much patience makes you miss out opportunities. Too much greed makes you lose money. So you have to walk a thin and straight line. And how do you do that? With experience of the market. Yes. Do you see that? Right. Okay. Everybody is aware of. Yes. No, I'm not doing another. I'm trying to keep this video as short as it can be. Yes, I don't want to pass over an hour with this video. So I will do another video on this topic, maybe weekend, or I will do a different topic, but I will start teaching online. Yeah, that's my line. That's what I should say. Without wasting further time, you've been watching my videos. That's why you say that. But seriously, without wasting further time, thank you guys for being live with me. It was a pleasure, even though the house was not as full. I expected 300 people to be live. Yes, only 100 was live. Okay. Yeah, and some were just quiet watching. I hope you guys who were quiet and watching, you guys got all the information, because no questions, no funny jokes, no nothing. Yeah. Yeah, but when it comes to trading psychology, yeah, this is it. Yeah, you can do a screenshot of this. But this video will be uploaded on YouTube, so you can revisit this whenever you're facing some problems so that you can learn through. Yeah. No, guys, I have to end this. I'm sorry, but I do have to. So, the takeaway from all this that we have done today, guys, is a strong mind is more valuable than the best strategy. The market will test your psychology before it tests your setup. So if you're weak psychologically, your trading setup means nothing. Yeah, please, you can also please comment. Yeah, please comment below with, even I'm gonna post this on YouTube. Even on YouTube, guys, please comment with the mistake that you've done before. Yes. Yeah. Okay. So thank you today, and make sure that you rewatch this video. I will not be posting your comment sections, guys. They're just too much. They're just too much. Yes. Okay. So thank you for watching. Thank you for being here, learning with me. This is by far the best video that we did. For the first time I taught live. I will be teaching live many times. Yes. So thank you and have a fantastic day. For those who are in the real account members group or members community, we are done trading for the week. Some people are still chasing pips. We are done. We are waiting for the market to give us a clear structure for next week so that we can jump in and make more pips again. Have a great weekend.